Good morning, traders. This is Scott G with the Simple Trading Life. Welcome to our Thursday live stream, going live early in the morning again. I've been out of town, actually out of state for the past couple of days, so I wasn't able to do any live streams. But I am back, so we are going to kind of look at the market action this morning. We'll see if any trades become available. Give me just a second to get everything situated here. There we go. So I have comments brought up. And hopefully we'll have some fun this morning. As you can see, we've got the opening range here, the opening candle, I should say, that will create an opening 30-minute range. Had a little bit of a spike down, and now it's trying to push up through this level of structure. This is what this gray box is. I had alerts set just in case price really took off one direction or the other. If we can break and hold above this level of structure, would probably be decent for some longs, especially if we could get above the 20. So if we got above structure and above the 20 SMA, that would probably be good for some longs. Those of you who may be new, this is the 20 SMA. This is the 50, which I've just recently added, and I usually only use the 20 and the 200. But I'm adding the 50 just because we've been talking a lot about trend trading strategies in our room. So that's why we've added it. And then down here we have our RSI momentum indicator. We do not use it for overbought or oversold. And as you can see, momentum has been down all morning. And right now, it's trying to reverse. It's trying to come back through where the momentum has been down all morning. So we'll see if it's able to do that. But as I said, what we have to do here is we have to break this level of structure, and then we really need to get above the 20 here. Now, I did take a trade this morning, which I will show everybody here in just a minute. I'm trying to give everybody a few minutes to join in, those who would like to join in. And this is recorded, so you can always watch these later if you have to pop in and out, if you're at work, or if you're just busy at your house. So give me 1 second here. I'm going to come over to our chat room. Let everybody know that we are live. And then we'll probably get some folks joining in. I see we've already got a couple. I kind of figured that's what I had done. I actually hadn't hit send on the link in the room, so hopefully now everybody knows we're live and they'll join us. So I'm going to give everybody a couple of minutes. What we had, obviously, this was the high, okay, of the overnight session, and then the low was down in this range. And so far, this morning, we have not been able to break the high or break the low, but I actually have taken 2 trades this morning. One, I got stopped out earlier in the morning for $25. Price had started to move in my direction. And then reversed on me, so I'd already moved my stop into profit. I try to do that as quickly as I can. Sometimes you're able, sometimes you're not. I've been very lucky lately that I've been able to move my stops into profit quickly. The trade I did take that was successful was after this move down, right here, the strong move down. And again, this candle was because of economic news. So the jobless claims report came out today, and it was worse than expected. So you would, right, traditionally, common sense, you would think that we would get a move to the downside, at least temporarily. And we did, but there have been a lot of economic reports come out over the past couple of months, a few months, where was terrible news, and then price actually went up, right? Trying to trap people. But today, the jobless claims was slightly worse than expected. It actually rose when they were expecting it to fall. And so we got this move to the downside, but we could not break through. If you look to the left, always look to the left here, we could not break through this pivot here. I'm going to take this off just so you can see it better. Okay, see this pivot right here? Okay, and then we went up sort of like a little double bottom. I could draw it in just so everybody can see it, especially if you, oh, I already have it on there, sorry. Okay, so you come down here. You don't even have to be exact. I'm just trying to show you what I'm talking about. And over here. And then on up, really. But we'll just go here. So we, whoops. Oh, I knew I would do that. Sorry, guys. Let me get back so I can show everybody what I was talking about. Here we go. All right. So that's what we had earlier, right? This was the start of the overnight session. But we had this like W pattern, double bottom, whatever you want to call it, right? And that creates this level of structure right across here, all right? And it already was a level of structure. That's where it was bouncing, but it's continuing. So if we extended this across, that's right where price dropped to. I'll just do it just so everybody can see. Obviously, visuals are better than just telling you something. Okay. So this was a level of structure from previous price action, but then it was confirmed here with this W action. See, we got several people who've joined us now. Then we made this move up, made our high of the session, sort of ranged sideways, started to fade, and we knew that already. Look at this, right? If we look up, okay, even though this was after 2 green candles, actually this was already moving down. This was already moving down. I drew it from here, but I could have drew it from here. So momentum was already starting to turn. Then we faded. The economic news came out. We have this drop into this level of structure. We get this immediate pullback right here to this level of structure, and that is where I took my trade. So I took my trade right here as soon as price started to, it hit and started to come back this way. I entered the trade. It very quickly, almost like instantaneously, went into profit, and I started moving my stop down manually. Once it got down right here around the 50, I'd moved my stop to about $100 in profit. So that was the absolute minimum I was going to make on the trade. It then came down to over here. Okay, so this candle ended. This candle started. This is our opening candle of the day. It started to go down. And so it went down, and I think at most I was 275 or 300 in profit, but I was trying to trail my stop because obviously if we would have broke this, well then we're highly likely to get down into this level of structure all the way down here. So I was just trying to play the highest probabilities. I knew I was going to make profit no matter what. So when this started to go, I moved my stop from 100 down to 200 in profit, and that's when we got the bounce. Then it bounced back up, stopped me out for 200 in profit, which I'm perfectly fine with, right? I keep telling you guys that are in my room, simpletradinglife.com, I keep telling you all the time, you gotta learn to be content, right? If you made profit, be content. Don't think you always, you know, again, would I have liked to get down to this level of structure? Of course, right? But how likely is that? Well, at this point, if you're not going to break through here, right, where we double bottomed, if you can't get through there, well, then the odds aren't very likely at that time. So you take what you can get, and then you look for the next great trade. And when I say great trade, I'm talking about high probability trades with conservative price targets. I even called out in the room, my price target was 32.59.50, which was right about there, right exactly there. So where my cursor is was where my take profit target was anyway. So I was going to exit the trade right there no matter what. So I had my stop and I had a take profit target with an order waiting to buy because it was a short, but that's exiting the trade. And then I was trailing it down manually with a stop. So there was no way I could lose on the trade. So I'm hoping that you newer traders maybe can learn from that. Number one, be content when you're in profit. But number two, manage your trade so you can't lose. If you're in profit, man, I can't tell you how many times I see it not only in my room, but on Twitter and with people I know. Okay, a lot of times they'll even be heavily in profit, big time. And they don't exit. They think they want more, or they've got a price, take profit target. Well, I think it can make it all the way down here to the 200. Okay, thinking doesn't pay the bills, right? Your opinion doesn't pay the bills. Your bias doesn't pay the bills. What pays the bills is taking profit. Just do it over and over and over again, right? You will make money. You will make money. Okay, so here is our opening range, but it's so important. That was one of the things I wanted to talk about today. That is so important. When you get into profitability, make it so you cannot lose. You're going to at least take some profit. It might not be everything you wanted. Again, I was hoping, right? I was hoping that we would break this level and maybe get all the way down here, but I wasn't banking on it. No matter what, I was going to take profit either with my stop or at 32.59.50, which was right in here, right where this level was. That way I could lock it in, and if it did bounce against me, I locked in the profit, and if it bounced, then I'm giving a hypothetical. Let's say it came down here, hit my profit target, and I locked in, and then it bounced back up here to opening price level, and then went lower. Well, what could I do? I could always re-enter right there. I could always re-enter. But I lock in profit, right? So I'm trying to drill that into your heads, especially even if you folks who might not be in my room. Definitely come check us out though, simpletradinglife.com, free chat room button. Everything's 100% free. But I'm trying to drill that into everybody's head. When you get into profitability, I know, I can't even think of his name. There's some guy that I watch on YouTube every once in a while. He is like, we don't trade the same way, but he's like me in terms of philosophy. I watch this guy occasionally, and he even says, he goes, I know a lot of people probably make fun of me because I have such conservative targets, but the guy is like making like 500 to 800 bucks a day, every day. Because he takes those consistent, smaller, conservative profits. He'll take a few trades every day. He piles them up and he makes, like I said, a big day for him is like, $1,400-1,500 bucks. And a small day for him is $200 or $300 in profit. But like ultra consistently, he's making about $500 to $800 a day. And he takes very conservative take profit targets. And when he gets into profit, he's immediately moving his stop into profit. And he's always saying that. His, I don't want to call it a catchphrase, but the thing he says all the time is, it's not a matter of if I'm going to make money now, it's how much. Because he's got to stop into profit. That's what you need to do, especially if you're a newer trader. So I was out of state for 2 days, and it was a 7-hour drive up, and I drove up Tuesday, and the 7-hour drive back. I drove back last night, and I listened to trading stuff all the way down, all the way back, various people, various strategies, some people forex, some people commodities, futures, some people equities. I just like to listen, right? Because I think you can always glean something, either positively or negatively, if you're always filling your mind with good stuff. one of the biggest mistakes I see from some of these teachers out there is they teach their students to, I'm going to call it gamble. And the reason I say gamble is they're telling them to have these huge stops. Huge. I was watching one guy and he was like, listen, if you can get at least 1-to-1 on your reward to risk, take the trade. I'm like, no, no, no. And here was the funny thing. He had one video where I think the title of the video was like testing 3 new strategies or testing new strategies. And he comes on the video and he's talking about how, these new strategies are based on how I trade to begin with, but I'm trying to tweak some things and all this. So he starts setting these trades up and he's got these huge stops. And like the very first 3 trades he takes, all 3 of them lose. And he's way in the hole to begin with. Now this guy's pretty experienced and he did eventually get out of the hole. He made a little bit of profit. He took a couple of trades later in the day that ended up being bigger winners, but he also took 3 big losses to start the day. I just do not, especially for newer traders or struggling traders, you should not have big stops. Okay, these people who talk about having big stops, they're also looking for huge gains. So I'm going to give you an example. They may enter a trade here, okay, on this pullback, and their stop may be right here, way up here, because they'll say this was the last structure high. And what I mean by that is they'll do it something like this. Let me show you. And then they'll say this right here. And everybody kind of does their structure a little bit differently, but I'm just kind of showing you what some of these guys do. And so assume this isn't here, that you were doing this in real time. All right. So because they're saying this was the last structure high, even though they're playing this pullback like I played this morning, they'll say put your stop a pip or 2 above this. Or a tick, right? Because right now we're on futures. If it was forex, it'd be pips. All right, so if you're entering at 32.67, let's just say 32.67. The high of this candle was 32.67.75. So let's say you entered at 32.67. You're telling me that you're going to have a stop at 32.82.25? To me, that's absolutely ridiculous. But that's what there's people out there teaching. Because they're saying, well, you've got to let this trade play out. Right? It might chop in here and then drop. Right? So you've got to let it play out. Your stop needs to be above the last structure high. And they'll say that's the structure high. To me, that's absolutely ludicrous. That's absolutely ludicrous. Right? So if I take this trade right here, my stop is 4 to 6 ticks up here, right? Just above it. And what happened? It immediately went profitable down to here, and then it started to bounce. I had a trailing stop. I was $200 in profit. Boom, it hits my trailing stop. I'm out, and this bounce doesn't hurt me at all. Doesn't hurt me at all. Now, if you were somebody that follows somebody that believes in these big, wide stops, right, you'd still be in the trade. Even though you entered here, you wouldn't even be thinking about getting out there. Now, I'm not saying that their trades don't work out, right? Because to me, it's more of a gambling strategy. They're looking then, for like maybe they took this pullback to come, all the way down here to the 200. If that's their strategy. And that's one of the reasons they have this big stop, because if they entered here, right, and this is their target, that might be a little over 1-to-1 or 1.5 to 1. To me, I don't know. That's just not good odds, right? If you take those trades, we talked about this earlier in the week on the live stream. If you take trades at 1-to-1 or 1.5 to 1, you have to win. And I mean win big, meaning you got to win like 70, 75, 80% of the time to make money. Because by the time you take out, any commissions or fees or spreads if you're in forex, You can't be a 50% trader if you're only doing 1-to-1 or 1.5-to-1. You've got to be 70, 75, 80% win rate. Okay? All right. Let's look at something. Okay, I'm trying to always teach you guys some stuff. This is Home Depot, by the way, and one of the members in our room is currently in a Home Depot swing, which I don't know how long she plans on holding it, but I believe I don't know if she entered this morning or if she entered yesterday. I think she entered yesterday. But let's just take a look at it. I have it up on the screen, and I'm going to talk about something that I talked about in the room today. And you'll see these 3 moving averages, and I'll tell you why they're on the screen. I'm trying to make it easy for people. So what is the trend? Let's just make it super basic. What is the trend? Well, the trend is obviously up. How do we know the trend is up? There's 2 different ways that you can easily identify it if you're a new or struggling trader, or if you're an expert trader as well. Okay, one way is to use moving averages. And this strategy that I'm going to teach you right now says to use 3 equal moving averages. So what I have on here now, this is for short-term trades. Those could be scalps, they could be day trades, right? Short-term. Use the 10, the 20, and the 30 EMA, exponential moving average. Exponential moving average gives more weight to the more previous candles, right? So if you have a 10 EMA, right, that's going to be the last 10 candles, but it's going to give more weight to the most recent ones, and then the 20, and then the 30. So your 20 in this case is sort of your signal line, and your 10 and your 30, all of them need to be moving the same direction. That tells you the trend. Okay, so we can see this, and this is a nice trend. This is about 45 degrees. Those of you who've been around me for a long time know that that is a good, solid trend that can last a long time. Why can it last? Let's talk about it. The easy way to know if you're around 40, 45 degrees is use your computer screen, and from one corner down to the other corner diagonally, that's 45 degrees. So if you're about on that same trajectory, right, you're going to probably be somewhere around 40 to 45 degrees. If you're in an uptrend or a downtrend, it'd be the other way if it was a downtrend, this corner over here down to this corner over here. If you're on that trajectory, that kind of a trend can last a long time because you're not running into exhaustion risk. What is exhaustion risk? This right here. Okay, see how it shot up? Like that's literally almost 90 degrees up, right? And then what happened? We rallied, we based, and then we dropped because we had exhaustion risk right here. And it dropped back down to this level of structure. I'll try to point out as many things as I can, but right now we're talking about this trend trading strategy and how to identify trend. We see this level of structure here. That's where price stopped. But why did it drop like this? Because it exhausted. This was almost a 90-degree angle to the upside. We based, that means you ran out of steam, and then we dropped, and we dropped like a rock. But then look down through here, right? Other than this one candle, look at how nice and smooth the ebb and flow of the trend is. See that? And it's just steadily going up. That's what you can get when you have a 40 to 45 degree angle. Much above that, okay, if you start talking about 60, 65, hot and higher, especially if it's like 90 degrees, you run the risk of exhaustion. Now, the reason you use these 3 equal moving averages, okay, and I'm going to give you some other numbers as well, is because it helps you determine the trend. Okay, so we can just visibly see the trend is up. Now, where do you want to look for longs? You want to look for longs in 2 different areas. The first area is when the 3 lines start to widen away from each other. So the 10 is getting away from the 20, and the 20 is getting away from the 30. These are for short-term trades, scalps and day trades. Okay, obviously, you can see right here, they started to widen. That would have been great. Then we got to pull back. We come up here. It starts, when you broke above these wicks, that would have been a great entry. And look, they were starting to widen. Okay, you should be looking for longs. Your entry right there would have been right above these wicks. And look what it did. It shot way up here. Now you got to be careful if you see that kind of a candle, right? Okay, then it pulled back. They come together. Okay, look what it does again. If you just drew a line right across here or even right across the tops of these bodies, they start to spread apart. Boom, you get a move up. Then you get a pullback. Okay, you see how that nice ebb and flow went right here? Same kind of thing. They start to widen. You break above this level right here, well, you're long. Okay, and you could rode that clear up to here. Pulls back. You guys get the picture. All right, it's the exact opposite if it's going down. Now, how do you find these? Very simply. Okay, again, this is Trend Spider I'm on right now. Here's the parameters I'm using in my search to find these names. Now, the people in my room, they know that I've got a list. When you see my favorites, okay, that's just my watch list. I've got about 30, 35 names in there, and it's all the FANG names. It's a couple of China names, a couple of weed stocks, some gold. I got the GDX and GLD in there. I have a couple of ETFs. I've got a little bit of everything. Okay, and that just gives me a nice, I've got some small caps, mid caps, large caps. I got a little bit of everything in there. So when you see my favorites, I'm scanning my list. So I did this, or I'm going to do it again right now, see if we get an update. Yes, so look at this. It went from 4 names to now a whole bunch. All right, I had 4 on there earlier. Now look at all the names I have on there based on this scan. This is a long scan, and look at it. So what we're saying is price has to be greater than the 10 exponential. The 10 has to be greater than the 20. The 20 has to be greater than the 30. And then we use RSI for momentum. And so what we're looking for is momentum to the upside, so that we're saying the RSI needs to be greater than 60. So pre-market, there was 4 names on there. Now, if you look at this, look at all the names on there that fit this criteria. Okay, Home Depot is the one we're on right now. Let's look at Netgear. Let's look at Netgear. And I'll expand this for you. Okay, look at Netgear. Look at this. Big gap up, and look at the trend. What kind of a trend has Netgear been on? It's been on a trend to the upside, right? If you come down here, again, this is just for momentum. Look at the momentum, right? We were sort of ranging right through here. Okay, you're not looking for trades when you see this. See how it's flat? You're looking for trades here, okay, where these 3 spread apart and they're going up at a nice angle, preferably around 45 degrees, approximately. Okay, so again, as they start to spread apart, let's say right across there. Okay, right across there would have been sort of your resistance area. So you break through there and they're starting to spread apart. You go long, you put your stop where you're comfortable, based on your account size and your risk tolerance, and then look at the move, and it pulls back and it just keeps going, right? There would have been no reason to exit this trade until maybe up around here or when it came back, or you could say, hey, I'm going to keep riding it, but all it did here, right, was came back to this level, then it pulled back, and then it started again, then it pulled back, and now it's starting again. All right, so it's a very, very simple way if you want to employ these simple trend trading strategies that I told you guys about over the weekend and we talked a little bit about on Monday. This is a very simple way to do it. Okay, this helps you. You can do this kind of a scan. You can probably do this on almost any platform. It just helps you find the right names to look at. Let's look at Twitter. We'll just go through a few of these, and then we can also do it to the short side. Okay, so again, Twitter overall trend recently, this is the 30-minute we're on, is up. Okay, so for 1, 2, 3, 4, 5, 6, 7, 8. For the last 8 trading days, we've been trending up. Where, if you're looking at this chart, where would the best opportunity for longs be? Now, I'll answer it for you because obviously you can't talk back and forth to me. You can type comments, but do we want to trade in here? Okay, do we want to trade in here, or really anywhere through here? Do we want to trade in through here? No. Here, when we break above this level, right across here, when the 10, the 20, and the 30 are separating, look at the move you get. Look at the move, and come down here. What was momentum doing? Okay, let's come back over here. See this? This is where it started moving to the upside. I'm going to show you again. Look straight up. Look straight up. In the middle of this is when momentum started to move to the upside. It was giving us a little bit of a signal. We're putting these things together. We're putting as many indicators, factors together to try to highlight a highly probable trade. All right, so we know, right, if we just drew a line straight across here, okay, you could even use like the tops of these bodies, right? Tops of these bodies. So right over here, and the moving averages were starting to split apart. Momentum was obviously already starting to go up. You're looking for longs. Okay, so if you entered right here, 35.46, okay, it went as high as 37.02. Okay, how easy is that? How easy is that? And then it kind of just pulled back, and then it went even higher. It went up to 38.50 without ever coming back below the 10. So if you're somebody who's confident, right, you got to follow your rules. But if you're somebody who's confident, you may say, all right, unless I see a break below the 10, I'm riding this thing out until I get some sort of a signal that tells me I want to exit. Now, when we get this big spike up like this, then we run the risk of what? Exhaustion. So then you have to be careful and see how it came back quickly. But still, it didn't close really below the 10. It just came back to it. Then we got to close below the 10 with a red candle right here. All right? But do you guys see how highly probable these are? This is as simple as it gets. Throw these three equal, and what we mean by equal is 10, 20, 30. I'm going to show you a mid-range 3 moving average indicator, I guess you could call it, in a second. And then there's a longer term one. Okay, but this is for short term. But all you do is put this stuff together, right? We were flat. We were ranging right in here. Momentum was flat. Momentum starts to turn. Look at these little peaks down here. See how this one is higher than this one? That's telling you momentum is starting to turn. Okay, so you look for your structure across here. If it was me, I would draw it right across the top of these two bodies. Look how these wicks came up to it, rejected. So if you break this, momentum is up, and the 3 moving averages are widening. That is a highly, highly, highly probable trend trade. Okay, and you can look back over here and say, all right, well, maybe your target is right here. Let me show you. Okay, see how this climbed and then came back down? You see this rally, 1 candle base and then drop? Okay, so maybe that's your target. You want to be conservative, right? You look to the left and you say, this is my target right here. That's great. That's absolutely great. That's the kind of stuff you should be doing, right? Or if you're a little bit more aggressive, you're saying, I'm going to ride this Okay, I'm going to ride this until we get a close below. You still would have had an awesome trade. Or when you see this big spike to the upside, if you're not greedy, because you shouldn't be, if you're not greedy and you see this spike to the upside and then all of a sudden it starts to come back, hey, I'm going to exit right here and I'll wait and see if it comes back and holds the 10. And if it holds the 10 and starts to go back up again, you could always re-enter. Right? But what did we do here? We kind of entered into a range just right through here. And how do we know? Because look at the moving averages. They all just came together and kind of flattened. You see this right here? You see this right here? That's why I'm telling you, you can use these. You can use these to help you know, okay, over here, we obviously know right here, because they're widening apart, that it's highly likely that we're going to keep trending up. They come together right here. We know when they flatten together, we know it's highly likely we're going to range and chop. We don't want any part of that. But as soon as we start to get an indication, okay, down here, we start to see momentum moving up. We start to see these widening apart. We immediately look for a place to enter. Okay, for me, it'd be right across the top of there. And you take the trade, you use your risk management, and again, pick your targets. Okay, right here would have been a great conservative target, right there, right across the top of these bodies, and you would have hit that easy, and that would have been good for not quite a couple of dollars, a little bit under a couple of dollars, but on Twitter, that's good money. That's good money and highly probable. All right, so let's go back. And let's switch some things up here. Well, let's do this. The first thing I'm going to do is I'm going to switch these to, I think, oh, it will let me. Okay. Remember, I'm new to TrendSpider, so I have to figure out what it'll allow me to do. Okay, so I'm going to switch this to a 1 hour. Okay, close above. Everything I switch has to go to 1 hour. You guys will see me do this. Okay, and now I've got to, oh, that's what I have to do. I am going to have to get out of here. Sorry about this. So now I'm going to show you a mid-range strategy. So the 10 is going to become 20. The 20 is going to become 40. And the 30 is going to become 60. All right? They're all equal. They're all equal. Okay, now I can come down and change these, I think. Let's see if it'll let me do it now. So we want this to be 20. Yep, there we go. And we want this one to be 1 hour. I'm just showing you how you do it. And this one will be 20. This will be 1 hour. Because now we're looking for a mid-range indication. So this could be longer day trades and short swings. You know, what I mean by short swing is a day or two. Okay, there's the 40. All of these have to be, and you guys can write these down, right? There's nothing proprietary about anything I'm doing here. Anything I give you guys is absolutely free. So now it's the 40. 1 hour, this will be the 60. And what we mean by equal is they're all equal distance apart. And then this will be 1 hour. And greater than 60. All right, so now we're going to do the scan on my favorites. Make sure I got it all right. Okay, so it brought up 1, 2, 3, 4, 5, 6, 7. So 7 names on my favorites meet this criteria. And I'm going to change this to 1 hour up here, and we'll look at one. Give me a second. let's go to, I'm going to try to pick one we haven't looked at. Let's go to CODX. I'll expand the chart. So now, the only difference, right, is that this is the 20, this is the 40, this is the 60. We're looking at longs, but these are going to be more mid-range trades that you're looking for. So you're going to probably trade on a 1 hour chart, right? And you're going to be looking for either a longer day trade or maybe a 1 to 2 day swing. So look through here. Would we want anything through here? No, right? Why? Because we're completely flat. We're completely flat. Where would we start looking? Well, we're going to start looking over here. We see momentum is starting to move up. Okay. We're looking at the indicators now. Only one of them is separating here. It's not until over here that all three of them start to separate. Okay, that all three of them start to separate. Momentum is high because obviously we would not know at this time what's coming, right? We wouldn't know what's coming. In real time, we start to see all three of them separate right here. I would probably be looking for an entry sort of right across the top of here. Okay, I wouldn't be clear up here. These wicks are just a rejection. So you can maybe even go right across the top of these highest bodies. So I would say right in here, approximately. So say 1912. So you take out 1912, look straight down. At the time, what's momentum doing? In real time, momentum was working its way up. They're starting to separate. Boom. Look at that move. Look at that move. So from 1912, it topped out at around 22.76. $3 move on a $20 stock. You would be rolling in it, right? You'd be rolling, and it happened all in one day. It happened in one day. So really 1, 2, 3, 4, 5 candles. Then it started to come back. Again, if you see this huge move to the upside, what's your risk? Exhaustion. So if you see price start to come back, right? You either want to exit maybe here or maybe when it takes out like the bottom of the body here, because that's a pretty good indication. And look what momentum did. It turned on a dime. All you're doing is you're putting this stuff together, right? Or somebody might be saying, hey, I'm looking to swing this a couple days. I'm comfortable. I'm going to let it come back and see if it holds the 20. It held the 20. I wouldn't trade it that way. I'm just telling you, like, man, you get that big of a move, a $3 move. At the time, the stock was $19. Man, I'm cashing that in. I am locking that in. I probably, because I'm conservative, this would have been a big green candle. Then it would have came back here. You move over, it would have tried to spike up a little bit and started to drop. I'm telling you right now, I either would have been exiting when it came through there and definitely by the bottom here, which is still almost 22 bucks, right? 21.91. You can see it over here. All right. So that's still almost $3 gain, and it happened in, 5 hours or so. All you're doing is letting price action and a simple tool, a simple momentum tool, simple indicator of 3 equal moving averages tell its story. Right? And then look what's happened today. Look at that big spike. All right, let's say right across the top of these two bodies. So that's about 21.25, and it's been as high as 23.40. So that's a $2 move on a 1 hour candle on a $20 stock. Right? Is it going to go higher? Maybe. Right? We don't know yet. Let's see, where are we at? Let me see what time it is. 10:30. So we got about a half hour to go on this one. Is this candle just going to be a resting candle, and are we going to try to form a 3-candle pattern play? Don't know yet, right? But I would be paying real close attention, because if it started to move back down, I'd want to lock in that $2. especially if you're an options trader and you just got a $2 move on a 1 hour candle on a $20 stock, man, your profit would be through the roof. But if it starts to stall and starts to come back against you, it'll start eating that profit up really quickly. So the difference between if you're trading shares or you're trading options might dictate how you play this. Okay? All right, so that was another look. Let's, all right, I'm not going to go ahead and do the longer term one would be 50, 100, 150. 50 EMA, 100 EMA, 150 EMA. That would be for longer term swings, 3 to 5 days and longer. You might even be in it weeks. Okay, so all you would do, and then you would go up to the daily. You'd go up to the daily chart. I can probably at least make the, I'll show you what it would look like. I'm not going to do the scan because I have to go through and change every single one of them. Okay, so you go to the daily, then you would move these. This is your short one, so it becomes 50. This is your signal line, it becomes 100. And then this is your long term or your slow signal line, your slow line becomes 150. Put it on your chart, open up, there you go. There you go. Okay, so what are we in? This is the daily chart. So since March on CODX, we've been trending to the upside. They've been spread apart. The only thing is, right? The only thing is you've got plenty of trading opportunities through here is when you get these big spikes, watch for exhaustion, right? When it was down here, it was at $4.55. And in 3 days, it went as high as $21.75. Look at this. $4.55 right there. 1 day, 2 day, 3 days, it went all the way up to $21.75. I don't know that any of you would have rode it all the way up there. I'm telling you, I know I wouldn't have. Right? Look at this. Look at this spike. This went up from $4.55 to $10.89, so almost up to $11. And then when it started to come back down, I guarantee you, I would have just been locking in profit. Now, the next day, it would have gapped up here, but look at the whipsaw. Look at the whipsaw that candle had, right? Okay, so now it exhausts. It pulls all the way back down. Look where it stops. Right at the 20. Right at the 20. Okay, it's not coincidence. That's why these lines, these moving averages are the way they are. If you're playing a longer term game, not the 20, the 50, you want the 50, the 100, and the 150, and you want it on the daily chart because you're playing the longer term game, right? So you got this nice bounce here, went back up, pulled back. Where did it pull back to? The 50, right? Okay, then it went up again. So you would maybe somewhere across here. That one, think about this. Of all the names we've looked at this morning, here would be the first one you probably would have got stopped out on. Right here, because I would have probably looked to enter right across here. Okay, so when this went above, these were separated. This was, momentum was trending up. Okay, but it went up and then it pulled back. I would have got stopped out. So what? Right? How many trades have we already looked at? And this is the first one we would have got stopped out on. All right? Okay, but this is how you look for the longer term ones. 50, 100, 150 on a daily chart. All right. See, we got a couple more people. Hey, I forgot. If you're new here, or even if you're not new, please give us a thumbs up. Smash that like button because that helps YouTube to recommend us to other people who are searching for what we do. And definitely leave comments, ask questions. I mean, that's all good stuff. All right. Let me go back over here. Let's go back and take a look and see what ES is doing. I've been trying to do some teaching here. All right, so we had some whipsaw. on this candle. We had some whipsaw here, and what we mean is big moves up and down, right? And we're still right here around opening price level. So we're not really doing anything. We didn't get a break and hold of structure to go lower, and we didn't get a break and hold. And remember, I said for upside, I'm looking for a break of this structure level and the 20. Okay, because we have obstacles up here. We either want to get above these or we want to get below these. And we peeked our head out, and then look at the bounce we got. Boom, big bounce up. All right, so we're going to go back over to TrendSpider. Now, what about shorts? Okay, what about shorts? So let's go back to the 30. I go back to the 30 minute. Now I am going to have to start all over down here. Okay, so for shorts, and I have to change my indicators back to the 10, 20, 30. Why is it not coming up? There we go. All right, so where's my short one? My short one is here. 10, 20, 30, apply. And all of a sudden my computer's moving slow, or it shouldn't be the internet connection. I've got a 1 gig internet connection, so I don't know why this is moving slow. So I apologize for this. I keep trying to apply it here. Oh, I know what it is. See what I did there? The one thing about TrendSpider, if they think a number is not truly valid, they don't let you apply it. Yeah, see, that's what it was, right? Who's going to have a exponential moving average of 15,030? So it like intuitively knows that's not correct. Okay, so now let's set up our scan for a short. So we're going to have 30 minute. That's what I trade on for my shorter. Price is going to close less than indicator 30 minute 10, right? And then now we have to just build it out. So now it's 30 minute indicator. The 10 is going to be less than or lower than indicator 30 minute. See, this is really not that hard, guys. Once you start getting the hang of it, you'll know how to build your scans. So less than the 20. Now we want the 20 on the 30 minute indicator to be less than indicator 30 minute, the 30. And then our final condition is we want RSI on the 30 minute, it doesn't really matter, indicator, RSI, and we want it to be less than constant value of 40. All right, why? That shows us momentum to the downside. So let's do a scan of my favorites. Okay, that's it. 1, 2, 3, 4, 5. Okay, there's only 5 of them. Let's look at, we'll just start right here with CGC. Okay, that's a weed stock. It's something that I do like to trade. It's one of the few equities that I trade quite frequently. All right, so let's look on the screen. Let's get into the habit of identifying what's going on. Where are we at right now? We always start at current price. Where are we at? Well, price is trending which direction? Down. And it's early in the trend. Okay? This, through here, we were not interested in. Why? Again, the moving averages had come together and they were relatively flat. Now over here, we would have been really interested for longs, right? We would have been really interested for longs over here. And look, we had everything working in our favor. Momentum was to the upside. The 20 had crossed above. The 10 had crossed above. The 20 had crossed above. I would have been looking for an entry right above this. This was like a 3-candle pattern play, and you're combining these candles here. Let me kind of come across, right? And so I would have had a target of the tops of these candles right across there, would have easily made it. Would have easily made it. So entry would have been here. I'm just telling you how I would have played it. Now, obviously, it went way higher. And again, if you're somebody who is patient, right, and you're looking, again, this all would have happened in one day. This was your first candle of the day. Let's see. I take it back. It didn't all happen. This is your last candle of that day. This is your last candle of that day. But still, here's how I would have played it. Take out the top of this candle. That's my entry. Momentum is to the upside. The 10 and the 20 at that point are above the 30. Okay, because the red line is our signal line, or it's the middle line, right? So we enter here. My take profit target would have been right under the tops of these candles, right up here, and we went right to it, kind of bounced down, and then we broke through it. Simple. Easy peasy lemon squeezy, right? My kids say that, or they'll say easy peasy pumpkin squeezy, either one. And then the next day, it continued up. It never got below the 10, and it came up here, but we had this big, massive rise up. What's our risk? Exhaustion, and then it started to drop. Okay, so that was in the past. What we're looking for now is a good short. So right here, they're starting to spread apart. Okay, so when we see them starting to spread apart, we want to come down and see what's going on down here. Well, what's going on down here? We've got momentum going down, right? That's what we're looking for. It's that simple. It's that simple. These three are starting to spread apart. We come straight down, and what's momentum doing? Momentum is dropping. We're actually below 40, which means momentum is strong to the downside. And so where could you have entered? I would say, I'm looking at this, my entry probably would have been on this pullback here. We broke below. See how flat it was? We broke below, we pulled back, and then we started to go lower. Came across. We didn't really pull back. We just flattened out. The 10 caught up. We bounced off the 10 again, bounced off, and we're still going lower. Still going lower. Right? So you could just keep riding this, or you might have a target. Maybe your target is the bottom of this wick, a little bit above the bottom of this wick. You'd probably already be out then. You would have took profit. If you believe that it's going to break this, for whatever reason, right? I mean, maybe your reason is momentum is so strong to the downside that you just think that even though this is the first test of this wick, that, you know, maybe it'll kind of pause here and then go lower. Okay, maybe you believe that. And I'm not here to tell you not to believe that. I mean, there might be a really good chance that's exactly what's going to happen. Because momentum is so strong to the downside at this point. This wick, even though it's the first test, what do I mean by the first test? This is a structure low. This is a structure low right here. Anywhere in this wick, you could see some support. It's where we're at right now. We're in this wick right now. Okay, so we're not getting an immediate bounce. That may tell you something. That may tell you that the sellers are way more aggressive than the buyers. We know the buyers were aggressive over here, not only because of the wick, but because of the move it created. This move right here. But right now, all the indications are that momentum is to the downside. We're trending down. The indicators, the equal indicators are widening, and momentum is strong to the downside. Okay, so I say this over and over again. If you are new here, we do not use RSI as it's designed. We use it to gauge momentum. It's a way better momentum gauge than it is an oversold and overbought gauge. I'm just telling you. I mean, the people in my room, they've seen it now over the past few months, how it works so much better as a momentum gauge than oversold or overbought. Not saying that it never works that way. It's just very inconsistent the other way, right? So let me make this a little bit bigger. I'll kind of do this so I can move it up on my screen a little bit. All right, so look what we've got going on. See how this is just moving right on down the 10. We're not getting any closes above. It comes back, it touches it, it knocks it lower. It comes back and touches it, it knocks it lower. That's what you want to see. If you're a trend trader and you're trading these simplified trend trading strategies, that's all you want to see. Look at this. They're still wide. They're still wide. And if they keep getting wider, that means that price is just going to keep dropping. And if momentum stays down in here, okay, until you see momentum start to curl around and come back up, everything is in your favor right now. Look at this. This is starting to, this was a green candle, even though it was an inside candle. That's a price action term for those of you who don't know. Okay, even though this is forming an inside candle, this was green. When it was up here, this was all green, and now it's already pushed down and it's starting to go red. What does that tell us? Okay, think through things logically. What does that tell you? Same thing here. This was green at one time when it was up here, and then it pushed it all the way back down to red. This was green, it pushed it all the way back down to red. What are those telling you? They're telling you that the sellers are in control. Every time the buyers try to push price up, they come in and they push it back down. How will we know when that changes? If this curls around and starts heading back up. If we drew a trend line down across these from here, across the top of here and on down, and then it curls back up through there and starts going the other way, we would know at that point, hey, we've got to watch. There could be a shift here. There could be a shift. And then when it got back up to the 10, if you're still in it, you may have exited already, but if you're still in it and it got back up to the 10, does it respect the 10 or does it go right on through it? If it respects it, and then you come back down here, okay, say it did break this, if you had a line there. If it broke there, but then when it got back to the 10, it turns and starts heading back down again. Well, if you're still under 40, that means momentum is really strong to the downside. Between 40 and 60 is neutral. Above 60 is strong momentum to the upside. Below 40 is strong momentum to the downside. And then if you understand your candlesticks, okay, they're telling a story as well. You're putting all of this stuff together. You're putting it all together to make really great decisions. Just the one thing that I would caution is take your profit earlier than you think you should. Right? Now, I'm not telling you if you're in a position that you're somebody that can just let this ride out, and it's because remember, these are a half hour, right? So this is more than one day here. But if you're somebody who's really patient, and as long as it doesn't close above here, I'm just going to keep riding it down, right? You may be able to ride it down, several dollars if it goes that far. But I think the higher probability play and the play that will most benefit you, especially if you're new or you're struggling, is to have your targets. Okay, whatever they may be. Maybe this was a target right here. Okay, you entered up here on this break. Okay, maybe this was your target. Did you get there? Yeah, you got there. Right, now it starts again. Let's look. Let's say we break this wick, okay, next target would probably be right here. Right here. That'd probably be your next target. If it breaks through there, where's your next one? Let's look. Might have to move this up. Okay, your next one would be right here. I would draw it right across there. Okay, that'd be your next target. So on and so forth. That's how easy it is. As long as all of this stuff keeps working in your favor. I don't know why it's not going back over that way. That's okay though. There we go. I was just trying to get more room on the screen. As long as these stay wide and you don't get a close above the 10 or some sharp break above the 10, right? Like you can't take rules so literally that you let them hurt you. Like some people, I've taught this to some other people in the past, and I'll tell them, okay, if you want to try to ride it all the way down, you're just looking to make sure that price doesn't close, a green candle doesn't close above the 10. Okay. Well, what some people will do is they'll get this huge spike, right? And it's like clear up here, and they never exited the trade, and they'll go, well, you said if I was trying to ride it down, a close above. Well, I kind of changed my vernacular to say a close or a sharp break above. If you see all like momentum shifts like this and you start seeing this big green candle form, yeah, if you're in profit, get the heck out of the way, right? Could have been some news that came out or something. All right, let's go back and we'll wrap this up fairly soon here. Okay, here is ES, still not doing a whole lot. Momentum still down. See this? See how we came right up to it, but then we didn't break above. Okay, so right now momentum is still down. But I'm not interested in any trade right now because of this whipsaw here. Look at this, this big wick. I would want to see it get down through here, and then I'd be really conservative. Even if it got down through there, I'd be looking at this level of structure right here. That's me. Okay, that's what I would be looking for. All right. Does anybody in here right now have any questions or want me to look at anything, or is there anything I can answer before we wrap this up? I'm planning on maybe getting off here right about 11. So that'll have put us on here about an hour and 15 minutes. I'll wait just a minute or two and see if anybody has any questions, comments, hey, what about this? What about that? I'd be more than happy to look at anything for you or answer any questions. So I'll give everybody just a minute, and if there's nothing, then we'll wrap up here, right around 11. See price trying to push back down. You see how, look at how most of the price action has been contained between these two structure levels. See that? Ekawande, good to see you, bud. I'm glad you're back in here again today. You're quite welcome. It's my pleasure. I'm just here to try to help people. So hopefully, hopefully people can tighten their game up and become, more consistently profitable. That is the goal, right? I watch a ton of like YouTube videos, and I listen to people, and I read books and all this kind of stuff. And I'll tell you, the people that I gravitate to are the people that try to make it easy for others. Like I'm not against anybody really. And what I mean by that is I think there's a lot of good teachers out there, and there's people that trade completely different than me, that they make a lot of money and they're good at teaching. But they keep things simple for their followers or their members or whatsoever. And then there's others that I'm just like, wow, they're teaching people to do this stuff. And then, people lose big money, following the wrong people. So I just try to keep it as simple as possible for you guys. This whole kick on trend trading came about from requests in the room, people wanting to know, hey, is there a simple strategy that's highly probable, that's super easy for us to follow? And I'm like, yeah, we can talk about real simplified trend trading strategies. And if you just follow the rules, they're so easy. And I'm hoping like Monday's live stream and today's live stream are showing you. And we'll keep, we'll go over these for a while until I think people have really got them down. There's some other things that I would like to teach coming up, but I try to stay on something for long enough that people understand it and they get it, and then they can start implementing it if it fits their strategy. I've actually had a lot of good feedback from people in the room that they really like this because it's so easy for them to identify, and it's so easy for them to know when they get in and out, right? The only challenge, I think, are sometimes people having targets that are too big. But other than that, oh, and you got to remember, let's go back over here. I'm going to go to a different one. Just, I mean, CGC was great. Let's look at Apple. I don't even know what the chart will look like, but we're gonna pull it up. Okay, so here's Apple. I can take these off. Take this off. Make the screen a lot clearer for everybody. I can't remember where I was going with this now. Trying to make it easy. Knowing when to get in. Oh, yeah, knowing when to get in and out. So, like on Apple, something like this over here. All right, obviously, we look down here. Momentum was strong to the upside. The three moving averages are moving apart. You get these two gigantic candles, and then price starts to just slow down. Okay, I'm just telling you right now, anything that broke below the bodies of these candles, I'd be exiting immediately. Okay, there's a lot of people that unfortunately this happens and they get so euphoric that they think, okay, well, this is just going to be a base and then we're going to shoot, higher again. Is that possible? Yes, it's possible, but what's more probable? Okay, I keep saying it and you guys keep seeing it over and over again. What's more likely to happen? That's what you have to trade. What is more likely to happen? If you get price that shoots up in a 90-degree angle like this, and then it starts to, right here, is that a base? Yeah, it is a base, but it's showing you that all of a sudden it lost this steam. And so what I would be doing, you could actually draw two lines. Draw a line across here, top of these bodies, draw a line across these bodies. And if it breaks and starts to go that way, okay, maybe you can try to catch more, okay? But what's likely to happen is an exhaustion. And look at this drop, right? Look at that drop. That's where I see people, the only thing I see people have a problem with this. They get greedy. They get greedy, like over here. Imagine what this looked like at one time. Huge green candle, right? Chaotic green candle, and what do we know about a chaotic green candle or red candle? It's likely to exhaust. What did it do? Boo! All the way back down here, right? And I guarantee you, I'm not talking about people in my room, but I guarantee you there were some people who trade Apple that when it was way up here and then it started to come back, they're like, okay, all right, it's just resting. Then it came back a little bit more. Okay, all right, I'm going to hold on just a little bit more. And the next thing you know, it's down here and they've given back all the profit and they could have had huge profit. Be content. Don't be greedy. Just take your money, lock it in, and you can always look for another re-entry like over here. Right? And then don't get greedy. Let price action tell you what's going on. If I see this and then I see this, I'm telling you right now, I'm drawing a line right here, and if I get below that line, I am out of there. I'm locking this in, and I'm not going to let that happen to me. Right? It's just silliness to let that happen to you. I'm not speaking to anybody in particular. I'm speaking to everybody. Right? And then avoid this stuff. So if I teach you a strategy like this, avoid this stuff. In my room, go to simpletradinglife.com. If you're not in there, click on the free chat room button. I put examples in there. I put charts in there. And I put arrows, okay? Over here. Let me show you. Okay? This is where you're looking for longs. Look at that, 45-degree angle. You see the three moving averages separating, momentum to the upside. You're looking for longs over here. Look at the nice price action. Pull back, push, pull back, push, pull back, push. Okay, now this was an exhaustion one though. It went up. You would have had to get out up here, exhaust back, right? And then we had one last push. Then we started to range. We really went into a contracting range. I'm not trying to jump all over the place, but eventually everybody needs to learn this stuff. It's all basic. What do I mean by contracting range? See how this is getting smaller and smaller, and this is getting smaller and smaller in here, even though it's going back and forth. Okay, now it looks like if we can break below here, it may start a downtrend. May, but you don't jump the gun. But you got to learn. Okay, you got to be patient. If you like Apple, you don't want to trade any of this. Over here would have been great longs. Okay, up through here, especially on the pullbacks. Over here, you can see these three are starting to separate. So what do? We look down, momentum, draw momentum here. Momentum starting to go down. We're below 40, which means strong momentum. Now let's look at the candles. Okay, what are the candles telling us? We had this pullback. We tried to break above, okay, but it didn't happen. The bears came in. We came down. Right? Then over here, we started to go green. Here, we started to go green, but bears came in, pushed it down. The only thing you got to watch about here, this isn't 45 degrees, is it? This is more like maybe a 75-degree angle, so you got to be careful. You got to look, okay, where's a likely area? Okay, maybe this wick right here, right? Anywhere in this wick could be a likely area that price might get into it and then pull back to the 10. If you're in this trade, like let's just say you entered up here, okay, on the break of this structure level and this pivot right here. Let's say you entered right there. Okay, for me, a wise target would probably be in this wick. So if price gets down there and gets into that wick, lock it in, then just wait for the next pullback. They're so likely, right? Price never, and this is what really trips up a lot of novice traders. Price never moves in a straight line. Okay, see what my cursor's doing? It never moves in a straight line. Look how it moves. Push, pull back. Push, pull back. Push, pull back. Push, pull back. I'm repeating this because I want you guys to see this. Push, pull back, push, pull back, push, kind of based, push, pull back, push, pull back, and now this is where everything changed and went choppy. So look at this entire uptrend, and we basically had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. We're going to call that 14. It's not really a pullback, but 15, 16, 17. We had 17 impulses, all moving in what direction? Up, trending up, right? Trending up. It doesn't move in a flat, straight line. So this gives you all kinds of opportunities along here, all kinds of opportunities when the conditions are right to take highly probable trades over and over and over and over again. It's that easy. Okay, it's us. When I say us, it's humans, it's retail traders, it's people who haven't learned to control their emotions yet that make it difficult. This is what you're looking for right here. Man, 17 impulses. And what do I mean by an impulse? Impulse up, impulse down, impulse up, impulse down. Okay, sort of like a heart monitor, right? How it goes up and down, up and down. The only difference is we know just by looking at our trend lines, our moving averages, we know that the trend is up. And then we just look at momentum. When momentum's up and we're bouncing off and then we get that separation, that's a long. Okay, then we have a target, we get out, we look for it to happen again. That's a long. So I don't know. How many of these would you have caught along here? I don't know, right? But if you're following the rules, you could have caught a lot of this. And you take it out chunk by chunk by chunk at a time. Conservatively, safely, you never put yourself at big risk, right? Even if you do, I don't see anywhere where you probably would have got stopped out. But even if you get stopped out for something small, but you're making nice gains on each upward impulse when the conditions are right. These are widening and momentum is up. All right. Okay, I'm going to wrap it up, everybody. Thank you so much. Again, give us a thumbs up, subscribe to the channel, turn on the notifications bell, and if you're not a member in our room, go to simpletradinglife.com, click on the free chat room button, come join us in the room. Everything's 100% free. We'd love to have you. We'll see you in the room. Bye-bye.